If you've ever felt the rush of winning a trade, or the frustration of seeing your stop-loss hit, you know that Forex trading is more than just numbers on a screen, it's a mental game. And if you want to win in the markets, you first need to win in your mind. Today, we're breaking down the psychology of trading, so you can develop the right mindset and trade like a pro. Let's get into it. Why trading psychology matters. Most traders think they just need the right strategy. But even the best strategy in the world won't work if your emotions control your decisions. Fear, greed, and impatience are the biggest killers of trading accounts. Ever held onto a losing trade, hoping it would turn around? Or closed a winning trade too early out of fear? That's your psychology controlling your profits. These are common psychological traps and how to avoid them. Let's talk about the most common mental traps traders fall into, and how to overcome them. Trap 1. Fear of losing money. Imagine this. You analyze the market. Spot a perfect entry. But just before you click buy, doubt creeps in. What if I lose money? That hesitation can cost you opportunities. The truth. Losing is part of trading. The best way to fight this fear is by managing risk properly. If you only risk 1 or 2% of your capital per trade, a loss won't devastate you. Shift your mindset. Think in probabilities, not emotions. Trap 2. Greed and overtrading. You hit a big win, and suddenly you feel unstoppable. You take trade after trade, ignoring your plan. Before you know it, you've wiped out your gains. This is greed in action. To stay in control, set a daily profit goal. If you reach it, walk away from the screen. Think of trading like fishing. Reel in your profits slowly. Don't try to catch every fish in the ocean. Trap 3. Impatience and revenge trading. Ever lost a trade and felt like you had to get back into? Make it back. That's revenge trading. And it's one of the fastest ways to blow an account. Markets don't owe you anything. Instead of chasing losses, step away, review your mistakes, and come back with a clear head. The best traders have a long-term view. One trade doesn't define your success. Trap 4. Confirmation bias. You place a trade, and then only look for news or indicators that support your decision, ignoring anything that contradicts it. Sound familiar? This is dangerous. Imagine you're trading your USD, and the news says the dollar is weakening. But the chart tells a different story. Trust the chart, not just the news. Always analyze the market from both sides. Ask yourself, if I were on the opposite side of this trade, would I still feel confident? Trap 5. Following the herd. Social media and trading forums can be useful, but they can also be traps. Just because everyone is buying, doesn't mean it's the right move. By the time most people jump in, smart traders are already cashing out. Example. Bitcoin in 2021, retail traders were buying at $60,000, while institutions were selling. Think independently and trust your own analysis. Trap 6. Emotional attachment to trades. Have you ever held onto a losing trade, refusing to cut it, because you believed it would turn around? That's emotional attachment, and it's deadly. The market doesn't care about your feelings. If your stop loss is hit, take the loss and move on. Think like a robot, not a gambler. How to build a strong trading mindset. So, how do we train our minds for success? Here are 5 powerful techniques used by professional traders. 1. Develop a trading plan. A professional trader never wings it. Your trading plan should include your entry and exit rules, risk per trade, and trade size. The key: stick to it. If your plan says exit at a 2% loss, exit. No second guessing. 2. Keep a trading journal. Every mistake is a lesson, but only if you learn from it. Write down your trades, emotions, and results. Over time, you'll see patterns. Maybe you always lose money when trading in the morning, or when you break your plan. Your journal is your secret weapon for improvement. 3. Practice emotional control. Before placing a trade, take a deep breath. If you feel stressed or excited, step away from the charts. A calm mind makes better decisions. Try meditation or exercise to stay sharp. Remember, a trader's biggest battle is with themselves. 4. Rewire your mind for long-term success. Forget the get rich quick mindset. Think long-term wealth. The best traders aim for consistency over time, not one lucky win. Slow and steady beats impulsive and reckless. 5. Train like an athlete. Professional athletes don't just play the game. They train, review, and improve. Traders should do the same. Backtest strategies. Review your losses. And always keep learning. That's how you go from average to elite. To quickly summarize, here are the common psychological traps. Trap 1. Fear of losing money. Losing is part of trading. Trap 2. Greed and overtrading. Reel in your profits slowly. Don't try to catch every fish in the ocean. Trap 3. Impatience and revenge trading. One trade doesn't define your success. Trap 4. Confirmation bias. You place a trade and then only look for news or indicators that support your decision. Trap 5. Following the herd. Social media and trading forums can be useful, but they can also be traps. Trap 6. Emotional attachment to trades. And these are the most common mental traps traders fall into. 5 powerful techniques used by professional traders to avoid traps. 1. Develop a trading plan. Include your entry and exit rules, risk per trade, and trade size. 2. Keep a trading journal. Every mistake is a lesson, but only if you learn from it. 3. Practice emotional control. A calm mind makes better decisions. 4. Rewire your mind for long-term success. Think long-term wealth. 5. Train like an athlete. Backtest strategies, review your losses. Mastering the psychology of trading is the secret weapon of every successful trader. Control your emotions. Trade with discipline, and success will follow. If you found this video helpful, smash that like button, subscribe for more trading insights. And let me know in the comments. What's your biggest psychological challenge in trading? Let's grow together.